Today, I'm going to explain how dividends are taxed in the United States. As a dividend investor myself, understanding the tax implications of this strategy is very important. Keep in mind, I'm not a tax advisor, so this video is only based on my personal research and experience. If you stick around to the end, I'll share a way you may be able to avoid dividend taxes altogether. My name is Zach, and you should leave a like and subscribe to the channel if you enjoyed the video. First, let's get some basic definitions out of the way. A dividend is a distribution of profits by a corporation to its shareholders. This is one way that you can earn a return on investment without having to sell your stock. Earned dividends are considered a form of income, meaning you have to pay taxes on it. However, the exact tax rate may change depending on the type of dividend and your income. In the United States, there are two classifications of dividends, qualified and non-qualified. A qualified dividend is taxed at the long-term capital gains tax rate, which is lower than the regular income tax rate. Non-qualified dividends, often referred to as ordinary dividends, are taxed at the higher regular income tax rate. So I don't know about you, but I'd like to pay less taxes. So what makes a dividend qualified? A qualified dividend must be paid by either a U.S. company, a company in U.S. possession, a foreign company residing in a country that is eligible for benefits under a U.S. tax treaty, or a foreign company's stock that can be easily traded on a major U.S. stock market. But wait, there's more. These dividends must also meet holding period requirements. The stock must have been held in excess of 60 days during the 121-day period beginning 60 days before the dividend execution date. Also, some dividends are automatically exempt from consideration as a qualified dividend. These include dividends paid by REITs, MLPs, those on employee stock options, and those on tax-exempt companies. All these will be treated as non-qualified dividends. So that may seem like a lot of requirements, but it's actually pretty simple. As long as you invest in eligible companies, which is most, and hold long-term, then the overwhelming majority of your long-term dividend income will be considered qualified. This means you can pay the lower tax rate. Let's take a look at how this actually works. In 2021, for single filers, if you make less than $40,400 in income, then your dividends will be taxed at 0%. If you make between $40,401 and $445,850, then your dividends will be taxed at 15%. And if you make more than $445,851, then your dividends will be taxed at 20%. This is for qualified dividends. If you look on the left side of this chart, you will see that the respective tax rates are much higher for non-qualified dividends. In 2021, for joint filers, if you make less than $80,800 in income, then your dividends will be taxed at 0%. If you make between $80,801 and $501,600, then your dividend will be taxed at 15%. And if you make $501,601 or more, then your dividends will be taxed at 20%. Once again, this is for qualified dividends, and the respective tax rates for non-qualified are much higher. The income requirements and tax rates are not set in stone and have been altered over time. With that said, let's hope dividends continue to get taxed at a lower rate. Let's say you watched this video and thought, it's sweet that dividends are taxed at a lower rate, but I'd rather not pay any taxes. Well, luckily, there's actually a way to avoid taxes on dividends. This is through a tax-shielded account, such as a Roth IRA. It's a retirement account where you can contribute already taxed money to invest. Once the money is in the account, you don't have to pay any taxes as long as you can take it out in accordance with the rules. Before you get too excited, there is a limit to the amount of money you can contribute annually, and you can be disqualified from contributing if you make too much income. But for the average person, a Roth IRA is a great way to save for retirement and let your money compound tax-free. Thank you for watching Dividend Data. I'd greatly appreciate if you could leave a like and subscribe to the channel. If you follow me on Twitter, link in the description, you can get real-time updates on my buys and dividends coming in. Also, you can follow me on Instagram at Dividend Data. You can support the channel over on Patreon, where you can gain access to a community Discord server. The link is in the description. Please leave a comment below, and thank you for watching.